Well, for more on these rising prices, alongside me is Sudakshina Unnikrishnan, soft commodities analyst at Barclays Capital. Thank you so much for coming in. It's a real problem which is actually causing so much upheaval. What's the situation like in India at the moment? It seems that the government is actually taking positive steps. Are we expecting them to take a positive effect almost, as soon as possible?
No, absolutely. I think it's become an important issue. In a sense, it's a lot of what we saw a preview of 2 years ago. Since 2008 or 7 or 8, we saw a lot of countries putting export restrictions in place. You had a similar sort of politicization of food inflation in terms of the riots. So in terms of the specific case for India, the biggest issue where India is a key contributor to global balances is for the sugar market, because India is the world's second largest producer and the largest consumer. And they are expecting a surplus in sugar production this year. But as you can see, over recent weeks, we've seen the government kind of rescinding and not exactly making its mind up over how much of exports it's going to allow. So, this sort of situation in India, I think, is very, very troublesome for policymakers. So growth is going well, but food inflation is really the biggest headache.
But what exactly is at stake? Because we talk a lot about, the price rise in onions, which is due to heavy rains, shortage and hoarding. But at the same time, we have all of this liquidity being pumped in by the US. And overall, they're just becoming more of us, and maybe the food is just not keeping up with the demand.
Well, the current sense of price rises is a bit more based on cyclical factors. So, we had excess monsoon rains in India in the last season. A lot of that meant that you saw a lot of the other crops being impacted as well. But in terms of a more secular trend, absolutely. I mean, it's a similar situation if you look at China or other emerging markets. Food inflation is a big issue in these countries as well, simply because, demand is growing very strongly. We've had a whole slew of weather-related problems this year, and internationally, food prices have been rising. So a lot of this domestic pressures is coming on the back of signals from international markets as well.
What about investors? Or can we talk about speculators? Is this something that is worrying you, but that we actually have hard evidence of?
Well, actually, if you look at the evidence in terms of the numbers, you haven't really seen a massive pumping in terms of money into food markets. So, take the case of onions, for example. They're not really traded very liquidly on international markets. It's very much of a domestic issue. It's very much based on supply-side problems primarily. You've had, a lot of problems in terms of international food markets. We're having a La Nina going on in southern hemisphere countries. You've had the floods in Australia. You've had the wheat export ban put in place by Russia. So a lot of these are implying that food markets across the board, on the back of weather and lower inventories and very, very robust demand, are facing a lot of pressure.
And your forecast for 1 year or 2 year is that the food prices continue rising?
Well, the way we look at food prices is that we believe the floor for prices has risen higher. So, a lot of the view that we're going to go back to mean reverting agricultural prices, we don't really think that's the case. The base for prices has risen higher. A lot of these commodities, sugar, for example, or wheat, or more importantly corn, are being used for biofuels. So you're having this new aspect of demand coming into the market. You're having a well lower level of inventory than we've seen in the past. And demand, as you mentioned, from emerging markets is very strong. So prices are going to stay high.
Yeah, unfortunately for a lot of the emerging economies. Sudakshina, thank you so much for that.